Agarwal from SBI Securities joins us now to discuss market fundamentals and its top sectoral picks. Thanks so much for joining us, Sunny. Sunny, while we're talking about the auto space, first up, your view on that particular space, and secondly, you do like a couple of auto ancillary names. Do you feel that the demand outlook is slightly uncertain now?
Yeah, good afternoon, Vivek, and thanks for having me on the show. I think within auto space, we are more constructive on certain segments like tractor and SUV. So within tractor, again, this segment we would like to ride through auto ancillary as there is a lot of uncertainty on what will happen on OEM side and which segment is going to do well. A case in point, a stock which we like is Swaraj Engine, which is subsidiary of Mahindra & Mahindra, basically a 3,800 crore market cap company. Recently, they have expanded their diesel engine capacity from 135,000 diesel engines to 195,000 diesel engine. And that capacity came on stream during the first half of this year. And the timing is very right, wherein we are seeing a revival in volumes as far as tractor industry is concerned. So we believe that the company has got a potential to deliver close to 170-180 crore profitability in FY26. Dividend payout ratio is more than 80%, ROE of 35 to 40%. I think trading at a reasonable valuation of 20 times 1 year forward price to earning multiple. So I think again one more play where we find the valuations to be attractive is Lumax Autotech. Again, a small company wherein the market cap is close to 4,500 crore, and our price target here is close to 850 rupees. The investment thesis remains the same, that they are more of an technology agnostic company wherein they make products like head and tail lamp, plastic tank, door panel. And they have recently went on to acquire two new companies, which is IAC India and Green Fuel, which will again give them a head start in terms of growth for FY26 and FY27. So our estimate is that for FY26, the company should post profit of close to 295 to 300 crore. And if we value at 20 times 1 year forward price to earning multiple, our price target is 857. Again, Garware High-Tech Film, a kind of proxy play on auto. So basically, they are into this paint protection film as well as sun control film, where majority of the business is from export market. So they have recently, they are on the verge of expanding their paint protection film business. Capacity going to double. And our estimate suggests that for FY27, the company is likely to post a profit of 400 crore against the annual run rate of currently 250 crore. So again, a bottom-up growth story trading at a reasonable valuation.
Lots of auto ancillaries in your pick, Sunny. Hi. I remember in one of the old conversations, you used to like FM Industries. That also makes automotive lighting components for rear view mirrors, etc. Is that still in your preferred stock list?
Rima, as of now, we would like to remain neutral on FM. The reason being that we are seeing a slowdown in two-wheeler sales volume in the domestic market, and again, FM is predominantly linked to two-wheeler sales volume, and that's the reason as of now we continue to remain neutral on FM industry.
In the past, you also liked stocks like a Zomato, Polycab, Nuvama Wealth. Now they generated a lot of wealth over the last 2 years, riding the upcycle. But things have slowed down from September, October. Stocks have corrected 30-40%. What is the call now on these stocks? Because I remember again from our earlier conversations that you used to like them, but the tide has turned.
Definitely I think tide has turned for both Zomato as well as Polycab, where we have seen, because of increase in competitive intensity, margins may come under pressure over the period of next 2-3 years. And that's the reason we have seen the correction in stock prices. Also coming to the capital market story again, because of the correction in the stock prices across the board, again, the sentiment has turned unfavorable for capital market stories. But if somebody has got a long-term investment horizon, I think we still continue to remain bullish on capital market as a investment theme, wherein a particular theme like asset management companies like Nippon, HDFC, AMC continue to look good, where we believe that AUM still has the potential to grow at 12 to 15% CAGR over next 5 to 10 years. And coming to the wealth manager like Nuvama, yes, we can continue to remain constructive, although in short term the earnings may get impacted because of the correction in AUM and so on and so forth. But if somebody has got a horizon of 3 to 5 years, I think capital market play continue to remain a good investment theme for next 3 to 5 years.
Got that. Sunny, one particular space, especially last week, that saw quite a bit of selling pressure was actually the cement space. Quite a few of the stocks derated on account of the tax as far as mining is concerned of limestone. You do like JK Lakshmi Cement. In the view of this particular news development, how do you look at that sector, and any other stocks you like other than JK Lakshmi Cement, and what's the rationale for liking JK Lakshmi?
Yeah, so again, basically, if you see the numbers of all the cement companies, you will see that profitability is at kind of 2-year low. For example, for JK Lakshmi Cement, during the December quarter, the EBITDA per ton was close to 450 rupees, and that used to be in the band of 800 to 1,000 2 years back. And September quarter and December quarter has been really a lackluster quarter for the entire cement industry. And with usually, if you see the March quarter is a seasonally strong quarter, so we are expecting a revival in terms of EBITDA per ton. And if I take a 2-year horizon, our estimates are penciling that EBITDA per ton should go up by 200 rupees on a per ton basis for FY26 and FY26, 26 and 27. And if I look at valuation, right now JK Lakshmi has got a capacity of close to 16 million ton. We'll add 4 million ton in next 2 years, and has aspiration to hit 30 million ton by 30. So on valuation front, trading at $100 to EV per ton, and even on EV to EBITDA, if I take 2-year forward number, trading at less than 10 times EV EBITDA. So I think the company has got a potential to go back to its earlier annual pattern rate of 550 crore from which is the currently subdued number. So if somebody has got a long-term horizon, definitely JK Lakshmi is one of the our top pick as far as mid-size cement player is concerned. And another player which we like is Star Cement from this basically a Northeast-based player. Recently, we have seen Ultratech taking 10% stake over there. Again, a relatively better play area where we have seen cement pricing holding on compared to the rest of the India. So Star Cement here, we have got a price target of 250 and with investment horizon of 12 to 18 months.
Thank you very much for that. We didn't get to ask you, your construct on the markets, but I'll just put it out there on the viewers. He believes the bulls are retired herd, but they're not out. India's long-term growth story is very much intact. For FY25 to 27, we could still see a double-digit earnings growth. Nifty is trading at 18.5 times below the 10-year average of 20.3. Mid-caps are trading at 24.9, again below the 10-year average of 28.6. And market cap to GDP is now at the 10-year average. So valuations are now relatively in a comfortable zone. We will slip into a break, but as we do that, here is some good news for all our viewers, because India's business news leader is now just a click away. We're introducing the all-new app. Get instant access to breaking news, all our articles, financial world updates at your fingertips. Download the CNBC-TV18 app now from the Apple Store or the Google Play Store, or you could just scan the QR code on your screen.